Alright. Thought that wasn't working for a second, but we got it figured out. So, today we're going over investing. Sorry for the delay. This is still going to be a quick one. I have things going on. Nothing bad, but just life in general. But anyways, gonna start off with the basics of investing. I guess how it works, what it is, or I'm gonna explain it. I do appreciate you guys for being patient. We're gonna get through this. It's gonna be really cool. And if you guys do want to check out that Bloom app, it is very recommended. It gives you all sorts of things from what politicians are trading, and analysts from other politicians, not politicians, stock traders, investors. Um, but yeah, so let's get started. Today we're gonna go on investing. I'm gonna go through the app or Bloom. I can through. Let's close this. Through Microsoft, if we really need to. Actually, let's give us a little start or heads up. Because I'm thinking of starting somewhere else. I don't want to, sound stupid. So let's go Bloom, learn. Alright. Yeah, so investing basics. And then we have the how to invest. Um, I know basically these, but I would love to refresh, especially dividends. Dividends are another good thing for people later on, or even in the beginning, honestly. Um, so let's just start off with here again. Um, please try out Bloom if you can. It's a pretty good app. Highly recommend it. I've learned quite a bit, and yeah. So to start off, why do you want to invest? Um, it's pretty basic. Like it says, make instead of working for your money, let the money work for you. Um, it's good to do both because working for money is a good sense of it's a good feeling. But when you just it's have that cycle of your money working for you as well, and you're continuously making money, that's just a good feeling because you can just do a lot of stuff. Um, myths about investing. You might have heard certain things about investing from your friends, family, or social media. There's a lot of common misconceptions about investing, so we're here to give you the facts. Investing is hard and complicated, and it's only for boomers. It's not. It's really good to start. I'm gonna need a lot of money to start. Wrong. You'll learn that there are fractional shares of stocks, and you'll have to buy the whole stock. But we'll get to that later. Myth 3, I don't have time to invest now, so I'll just start later. Never. That's one of the biggest things I had. The issues I had in the beginning, I thought it was a get rich quick scheme. I just kept pulling out, and it's just not a good thing. Just if you're a long term investor, just grow, let it grow, and know what you're doing. If you don't know what you're doing, at least do a little bit of research, and you're gonna figure out at least the S&P 500 is a good thing to invest into. If you're long term as well, per se. Um, I'm going to lose a lot of money, and it's super risky. You can always choose safer investments, and Bloom will teach you how to pick what to invest. Um, they actually in the app have something in there that actually they do have a preferized thing little setting. So you just show if you're skilled, non-skilled, kind of skilled, how much money you're wanting to lose. Like if you're wanting a moderate, or if you're wanting even a riskier portfolio. Um, so in order to start investing, you need to be rich. False. You can start with just $1 on Bloom, and even if they even have a deposit thing in Bloom. If you put money, they match it. I'm pretty sure it was. Uh, you should wait until you have more time to invest. False. The earlier you start, the better. You will probably lose a lot of money from investing. It's super risky and everyone loses money. False. Practical choices help reduce risk. See, it's pretty basic. Well, I guess, I don't know, I can't really be saying that. Okay, so how money grows? You get $1 million right now. You get a penny that doubles each day for 30 days. Which one did you choose? After 30 days, 1 million is, well, 1 million. On the other hand, a penny that doubled every day for 30 days become over 5.3 million. This is because of compound interest. Compound interest is a superpower that makes your money grow faster and faster over time. The earlier you start, the more compound interest can grow your money. For example, if you start doubling the penny just 5 days earlier, if you it would have become 172 million. Stocks can grow from compound interest, so starting with small amounts can become large over time. Bloom offers a tool that shows you how much money you can make by investing. Try it out here. Potential return. All right. What is a stock? All right. A stock is a slice of ownership in a company. So, when we're talking about investing, it's more than just a stock. It's also something like real estate, owning something that is a asset, not a liability. Um, and that's a very important thing. And that's of course, where supply and demand comes in, of course. But we'll also get into that later. A stock is a slice of ownership in a company, of course, as I just said. When you buy a stock, you're buying a small piece of a real company, and you become a part owner of the company. Remember, thousands, millions of people do this too. So just don't get your ego in your panties, okay? Don't get your ego too big, okay, buddy? Anyways, you buy stocks of many different companies, including some you may already know, like Apple or Nike. And it's really cool because stock prices can go up and down every day, and so the value of your investments can also change every day and sometimes by a lot. If your stock's price go up, then your investment also increases in value. Here, let's not skip this in. You can buy stocks of many different companies, including. Yep, already okay. I'm so sorry, guys. So, as a part-time owner or investor in a company, you hope that your company can grow so that you can grow your money alongside it. But how does your money actually grow? Just like with anything else you buy, every stock has a stock price, which represents the value of a single share or piece of stock. So, as I said, stock prices go up and down every day. Ultimately, stocks are one of our best investments for building long-term wealth, having grown on average 10% per year in the last 30 years. Now, I want to show you guys something. I have this little thing. It's called uh, Stock IO, and it's real-time stock, but not real money. And there's this micro strategy, but I did this started March 11th, and we're up 869, and I put 2,968. That's a pretty good return, and that's only a 29% return on almost 30% return on that on just those two shares. Um, and that took about a month, of course, maybe 2 weeks, but that's fine because that's the best thing about investing is being patient. It tests your patience. It's a mind game almost. Anyways, we'll get more into this as well. And actually, something about MicroStrategy is they're very into Bitcoin. So when you see that Bitcoin um, price rise, this company's stock is gonna rise, of course, because they're top five, top 10 holders in Bitcoin right now. Um, But yeah, it's pretty gnarly. Anyways, so what is a stock? Interest rate of the company? Wrong. Profit percent of dividends. Slice of ownership in a company? This one. Voting power is nada. Purchasing more stocks of a company results in lower dividend rates, more ownership of the company, more company revenues. You becoming rich overnight. The price of a stock stays the same, goes up and down every day. It is guaranteed to increase, can always be predicted. As it said, goes up and down every day. Alrighty. Risk and reward. Risk equals how much you can potentially lose on an investment. Okay, take notes on this part. Risk and reward. Let's say you invest $10 in a stock. You risked $10 since Disney goes off business. You lose $10. On the other hand, if Disney stock doubles in value, then your $10 investment will be worth $20. In this case, your reward would be $10 since you've gained $10. Now, be careful when thinking that a lot of people have the mistake of thinking, as like I said earlier, the issue I had is get rich scheme, and it's not. It's really something to really take it in consideration. Is if you really think a company is going to go big in the future or going to continue being here, that's a company you definitely want to invest in. But there are also companies that 5 years or 5 year return is 30% sometimes, and it's kind of, yeah, you just kind of have to do your research. Anyways, if you th- but how should you decide whether to invest in Disney or not? Well, it depends on what you think is more likely to happen: the stock doubling or the company going out of business. If you think it's more likely that stock doubles, then Disney might be a good investment because you are more likely to earn $10 than you are to lose $10. In other words, your potential reward is higher than your potential risk. If you're comfortable with probabilities, imagine there's a 90% chance that Disney stock doubles, and only a 10% chance that it goes out of business. Now calculate your potential risk and reward. You can see why Disney would be a great investment. It's important to understand that you can directly control how much risk you can take on by deciding one, how much money to invest, and two, what you invest in. The more money you invest, the more money you're risking. For example, you invest $100 instead of 10, and in Disney, your potential risk is 10 times bigger, but your potential reward is 10 times bigger as well. And by, and by picking what you invest in, you can control your risk as well because some stocks are more likely to lose your money than others. They have higher risk. In general, oh, how to throw out a hair. What the fuck? In general, higher risk stocks can also have higher potential rewards, while lower risk or safer stocks typically have lower potential rewards. As an investor, your goal is to pick a set of investments that gives you the highest potential reward and lowest potential risk. And in the next lesson, you'll learn the most important technique to achieve this: diversification. All right. Diversification's pretty, self-explanatory. So, with this, of course, this isn't diversification. I only have one stock. Now, what I can do is I could buy Tesla, and price per stock 179.83. So I can just put, I got my buying power 7,031. Let's just put 1,000. And mind you, the market is closed right now, so it won't really mean anything. Um, One thing I don't like about this thing is like it doesn't show you the long term. It's all good. Um, so let's go back to this. Wrong one. Oops. And then intros to ETFs. Let's go to this. Very beautiful thing. This is for you long term lovers. Anyways, ETFs. A bundle of stocks that you can buy as one. So if you don't know what to invest into, if you don't know what to do, there's ones where you can invest into just stock like technology, small businesses, um, what else? I think there's other ones. The whole market in general. For example, let's say you love tech and want to invest in Apple and Google. You could just buy these two stocks, but you'd be missing out on other great tech companies like Nvidia. Nvidia, by the way, has been doing very good. ETFs come to the rescue. They allow you to make one investment that covers many different companies in your industry of interest. By investing in a tech-focused ETF like QQQ, you can automatically diversify your investment into many different stocks. There are even ETFs that track the entire stock market. Like I was saying earlier, like if you don't know what stocks to choose, SPY and VU are both ETFs that track the S&P 500. The S&P 500 consists of the top 500 companies in the U.S. They are limited to industries. They can also be grouped by location, company size, or many other factors. If a particular company crashes, it won't affect your investment too heavily because there are other companies in the ETF. So by investing in a tech-focused ETF, okay, like that, even if Apple stock has a bad day, maybe Google or Nvidia stock has a fantastic day, balancing out your investment. Um, in the last 30 years, and S&P 500 has increased 10% per year on average. So if you have had invested SP an SPY 30 years ago, you would have grown your initial investment by over 16 times. All right. So yeah, investing basics, of course. Now, how to invest. Buying low, selling high. Let's say you buy one share of Tesla stock at a stock price of 50 a share. After a couple months, the stock price doubles to $100 a share. So you sell it. Since you purchased a lower price and sold at a higher price, you made 50 bucks. Stock prices go up and down daily, but the profits can be huge over months and years. So remember the number one rule: buy low, sell high. Take the key to success. Dividends, huge thing. Buying and selling is the only way of making money from stocks. There's an easier way. Did you know some stocks pay you money just to own it? They're called dividends. Dividends are a company's profit paid to people who own their stocks. Dividends are usually paid out every quarter. You just need to own the stocks to receive them. Apple offers dividends, for example. On Bloom, you'll automatically get paid dividends for stocks that you own that offer them. So you can honestly do it on any other brokerage account, um, like Robinhood, anywhere. Cash App probably. Yeah, Cash App has a thing where you can invest in stocks. Venmo, you can do crypto. I'm not too sure about stocks. Coinbase, you can do crypto. Forex is another kind. There's a lot. Anyways, which is a valid way of making money from stocks? Dividends. How to invest. Investing strategies. What kind of investor do you want to be? Oh, they got me. Well, guess what? Chicken butts. Right here. Right here. Can't stop me now. Oh, well, looks like they got me. All right. Well, I'm gonna figure this out. Let's try this one more time. I paid for this shit, man. You should let me fucking use it. Okay, good app, anyways. But that's investing basics. That's the basics so far. Um, right now, I'll give you guys a few things just if you're still listening. So, we went over economics. We went over supply and demand, inflation, scarcity, free market. I'm pretty sure we went all over all that. Now for investing, something you guys should know is I'll give you guys different types of stocks. Um, there's growth stock. Growth stock are companies with the potential to grow, and that's they're high risks, faster than the average stock like Tesla. Tesla hasn't been doing good too lately with some factory issues like in China. There's an arson issue in Germany, and then there's of course the competitors that are coming out now. Anyways, and I'm sure you guys understand that there's the value stock, companies that generate significant profits compared to their stock price. So they're low risks as well. Dividend stocks, quarterly payout to shareholders. Fractional stocks, a stock that lets you purchase fractions or parts of its shares for as little as $1. So pretty much the stocks that are, that let you buy the whole thing. Not the whole thing, but parts of it. Um, Non-fractional stocks must pay full price. Of course, a fractional price you could pay as little as $1. And a blue chip stock are large, reputable companies like Tesla, right here. Um, and then we have a penny stock. Penny stocks are priced less than $1. There's a company out there, Car Therapeutics. I think it's. I don't think it's this one. All right. Anyways, um, that's another one that's kind of pretty low. Not really. Anyways, it was doing pretty good. Um, Another tip is if a lot of people are buying a stock, its price will go up. If a lot of people are going to sell it, then it will drop. And it's pretty much like if a person has a bunch of shares in this company and they sell it, it's also going to drop. Um, and you also have to be careful with the risk tolerance. And remember what that was is that's how much money you're willing to lose. Um, but yeah. So I will give you guys a few stock ETF stocks for overseas. There's AME and DME, and then for top five U.S. 100 comp for the top U.S. 100 500 companies is sorry I'm reading this from my notes. SPY and VU, and then for the commodities ETFs. So the important stuff: gold, silver, and gas. Literally as they are gold, silver, and gas on ETFs. And of course, remember what ETFs are. They're the bundle of stocks that you can't buy as one. It's like buying a carton of eggs instead of purchasing 12 individually. Um, I do hope this does you guys well. I appreciate you guys a lot. I'm trying to figure this all out. I'm not too good at this at the moment. I'm getting better, but we'll get there. Cause I really got really want you guys to be financially good as well. And while I'm like enjoying my freaking life, I want you guys to too. Um, sorry, I'm a bit tired. Kind of busy today, but appreciate you guys.